In this video, we are going to talk about gold investing. If you're new to our channel, welcome. And if you're wondering why is this girl suddenly talking about gold investing, I'll give you a little bit of context. So we've already made a video on investing 101 where we covered different kinds of investment. So we covered 5 different kinds of investments. First was stocks and ETFs, second is gold and silver, third is real estate, fourth is crypto, and fifth is superannuation. Superannuation is more like your pension fund, and it's the Australian version of pension fund. So we made another video where we went into detail for stocks and ETFs. This is somewhat of a detailed video for gold and silver investing. Now let's talk performance. Year to date in USD, gold has gone up to 38% and it's about 40% in AUD and about 35% in INR. What all that means is, let's say if you invested about $100 in gold at the start of this year, that is 1st January 2025, and if you invested that in USD, I told you as of 4th September, year to date increase has been 38%. So your $100 would have become $138. That is quite a rally, isn't it? Now, do you feel like, oh, I missed that rally? I mean, I don't think so. Gold's job is to protect in messy times. And unless you have been living under a rock, we all know the kind of turbulent economy that we are living in. There's war, there's all sorts of things going on. So gold is more like an insurance policy and its job is to protect in turbulent times, and it's doing its job really well this year around. Now let's talk about what is causing this rally. First is interest rate. The US Fed is expected to cut interest rate. Now that makes bond markets less appealing and investors look at buying gold because it's more attractive. The second is dollar weakness. So just this year, dollar has fallen by 10% in value compared to a basket of other currencies, for example, the Dixie index, which again makes gold cheaper for investors abroad. Next one is central bank buying. Countries like China and India are accumulating record amounts of gold to their reserves. And then the next reason is geopolitical mess. We all know about Russia, Ukraine. We all know what is happening in Middle East. And then there's BRICS versus US. Gold thrives when the headlines look scary. So while I was doing this research for this video, I read that Wall Street analysts were forecasting gold to go between 3,700 to 4,000 an ounce by mid-2026. And I was doing all of this research on 4th of September. 4th of September 2025, gold had already reached 3,560. So they were projecting 3,700 to 4,000 by mid-2026, and by September 2025, we were already at 3,560. So to me, it feels like 3,700 is not that far. It's going to reach in maybe a few days, but again, is that guaranteed? Never. Now let's talk about silver. Silver is usually seen as gold's shadow, but not this year. Silver has risen more in value than gold in USD and even in INR. I think that's because of two main drivers. One, silver is also seen as a safe haven, just like we saw with gold. And silver has industrial demand. So it's used in solar panels, EV batteries, and electronics. So these two drivers make silver very powerful but also very volatile. For example, between 2011 and 2015, silver lost about half its value or more than half its value. So if you are investing in silver, you need to be able to stomach the swings. Now let's settle the jewelry debate. Growing up in India, you have often heard someone saying, let's buy some jewelry, it's an investment. But is it really an investment? If you ask me, no. That's because when you go and buy gold jewelry, you are paying for the weight of gold plus making charges, wastage and GST. Now, let's say all of this accounts to about 5 lakh Indian rupees or something. Now, on the same day, when the gold price is exactly the same when you bought it, if you were to go and sell this jewelry on that same day, you're not going to get 5 lakhs back. So, was that really an investment? No. But for emergency purposes, maybe you can just go and sell. Jewelry, in my mind, is more emotional. Yes, definitely buy jewelry, but don't treat it as an investment. Now, how can you invest in gold? Because investing is very financial. I'll talk you through. So, if you want to invest in gold, you can buy gold coins or bars. You can buy ETFs. And in India, you can also buy sovereign gold bonds. This is just in India as far as I know. I don't think there's anything similar in Australia, or I have not done any research for US. And our audience for this channel are mostly from these 3 countries. Okay, now let's talk about coins or bars. They are very tangible, it's physical, and it involves very less premium. So you're paying for the price of gold, plus the company that is selling you may add a little bit of premium for that physical gold. It's more like service charges or something like that. It is still not as expensive as buying a jewelry. The next one was ETFs. Just like you would buy any other ETF, like in your ASX or Nifty or anything like that, just like you would buy any other stock or ETF, you can buy gold ETF. Some of the gold ETFs in Indian market are Nippon India Gold, or there's also one from HDFC. Whilst in Australia, you have PM Gold and just GOLD as the ticker from Global X ETF Securities or something like that. So you've got PM Gold from Perth Mint and Gold in Australia, and Nippon India Gold ETF, HDFC Gold ETF in India. So if you're investing in gold, there are 2 major ways you can buy them: gold bars or ETFs. Gold bars, you'd go to any shop or banks and you'd buy it. In Australia, you can buy from Perth Mint or ABC Bullion. If you're buying ETFs, you've got Nippon or HDFC Gold ETF in India, and you've got PM Gold or Gold ETF in Australia. There's also this third way you can invest in India called as sovereign gold bonds, and I think it pays about 2.5% or something like that annually, and then there's price appreciation, and if you hold for like 8 years or something, it's tax free. I have not looked into it because I've not invested in any of these. I've just done some research for this video, and this is what I found. So if you're investing in gold, you have 3 options. If you're in India, buy coins or bars, buy ETF, or buy sovereign bonds. And if you're in Australia, you can again buy physical gold from Perth Mint or ABC Bullion, or you can invest in ETFs. Now let's talk portfolio allocation. How much gold is enough? Most advisors say about 5 to 10% of your portfolio can hold gold, while aggressive hedgers may go up to 15%. Think of gold as an umbrella. 1 or 2 umbrella in your home can help you at the time of storm. But if you have 10 umbrellas in your home, it feels like your house is cluttered. Too little gold in your portfolio, you're exposed at the time of crash. And too much gold in your portfolio means you're not getting stock market compounding. Right, a sensible mix in my mind is something like this. So I'm going with about 10% or so of my investment portfolio holding gold, out of which 5% is in ETFs. About 2% is in physical gold, so bars or coins or something like that. Another 2 to 5% or 3% or so silver if I'm feeling very spicy. I'm not a financial advisor. I am just here, someone random in YouTube sharing my opinion who just does a lot of reading on investing, money and all that. And this is somewhat of a sensible mix, I think. Let me know in the comments below what is your take on a sensible mix. Okay, so just to bring it all together, if you are new, start off with investing in ETFs or sovereign gold bonds if you are in India. Don't call jewelry an investment. Keep a bit of physical gold for emergencies. Don't expect fireworks each year. Gold has long, flat periods. And remember, gold and silver are more like insurance. They are not your wealth builders. They could be your wealth builder if you time the market, but we are not going to time the market. We are long-term investors over here. Gold is not a get-rich-quick scheme. It is the protector. Silver is more exciting, but it is also volatile. Let me know if you enjoyed this video. I like talking about money, I like talking about investing, I like talking about all this, but I've realized I didn't make this video for such a long time only because the reception for investing type videos was not much, and I felt like people are not enjoying this type of content, but there were specifically a couple of my audience that messaged and asked me to make a video on gold, and that motivated me to make this video. Let me know in the comments below if you enjoy this content or if you don't, in a very unfiltered manner. That way we know what kind of content you like and we can start producing a lot more content. And let's start normalizing talking about money. I've hardly seen women talk about money, and I want to try and normalize talking about money. In our household, I talk a lot about money than my husband does. He has very less interest in money, whereas I have so much interest in money. So let me know in the comments below what you enjoyed about this, what kind of video I can make if you are interested in this kind of videos. And I'll see you in another one. Bye.